Um, so now we know who will be President of the United States. We wanted to just share a few thoughts on the economic outlook. And when thinking about the outlook, there are a few questions that immediately spring to my mind. So there is a question of age. Will age play a factor? Are we likely to see just a single-term presidency? What is the current balance of power? What are Joe Biden's economic policies likely to be? Who are the people that Joe Biden is going to put in place to help him govern? What are the trade relations going to be, particularly with China, but also from a British perspective, how that might go for the UK? The pandemic, obviously, what kind of stimulus measures we might see, and just a quick look at present-day market conditions. So just a quick note before I get into all of that. So I'm just one voice among many on the investment committee. So these are just the thoughts that are occurring to me, and obviously any speculations that I make are mine as well, and they're subject to argument and debate inside the investment committee. That's me there, the bald one. Okay, so is age a factor? So I'm guessing it will be, because Joe Biden at the age of 78 will be the oldest president on record. The prior oldest president is of course Donald Trump, who was 70 when he was when he first took office, and before that Ronald Reagan was 69. So the average, by the way, is 55. So at the start of the presidency, and then at the end of the presidency, the average age is 60. So Joe Biden will be 78 at the start and 82 at the end of his first term, at least. So Joe Biden is significantly older than the average. So I mean, obviously advances in medical care and all those kind of things mean that age isn't the factor it once was. But I ask myself, if I was 78, would I want to be president of the United States? And maybe I would, but not for more than 4 years. But anyway, we'll see. So there's a chance we could be doing all of this again in 4 years, I guess. But more importantly, let's look at the balance of power as it stands, because the last few months have seen some important changes across all branches of the American system. So obviously in the presidential election, we saw, we will see a shift from a Republican president to a Democratic president. In Congress, we saw a third of the seats up for grabs in the Senate, and we don't know what the actual numbers are from that yet. There's a runoff in Georgia where 2 seats are still up for grabs. But I suspect the Republicans will win those, which means that the Republicans hold a slim majority. But even if they don't, the Senate will just be split 50-50. So you can see how the Senate will act as a check on the executive branch's power. And then also we've had some movement in the Supreme Court, where we've seen a Democrat nominee be replaced by a Republican nominee. So that's the death of Ruth Bader Ginsburg and subsequent replacement by Amy Barrett Cohen. So some people are making some stock of all of this. We've got 6 Republican nominees, 3 Democrat nominees now of the 9 members of the Supreme Court. But I'm not sure that the sort of conservative liberal split is the best way for understanding what goes on in the Supreme Court. But in any case, what we've got there is a fairly neat balance of power, as far as I can see. A few of the scenarios that we were debating in the investment committee prior to the election well, there were quite a few, but here's two that stick in my mind. There was the potential for what we called the blue wave. This was a Democrat sweep, taking the presidency and the Senate, and quite a big majority in the Senate too. But we felt that the polls were wrong. We felt that the extent to which Biden was leading Trump was overinflated by the polls. And in particular, this was our least favored likely outcome. So, you know, it wasn't an outlandish probability. It was quite likely that a blue wave, it could happen in the grand scheme of things, I suppose. We didn't think it was going to, but it was a possible outcome. And we felt that as far as the markets were concerned, that wasn't a particularly market-friendly scenario. And then the other scenario that sticks to mind in my mind was the red mirage, which is pretty much how things materialized. So the red mirage is sort of shorthand for what we expected. That was the early convincing Republican lead, which perhaps evaporates over time. So, but the point is, plenty of changes here, but we are left with a pretty good balance of power, I think, in the US at this moment in time. This is a pretty good outcome as far as markets are concerned. And the reason for that is that this good balance of power is going to mean that it's very unlikely that we're going to see any extreme policies be put into practice. And the one difficulty in trying to talk briefly about Joe Biden's likely economic policy is that we didn't really see much scrutiny. It didn't really feature in the debates, did it? I mean, this was an election battle that was not heavy on policy, let's put it that way. It was all about personality. And for the most part, Biden and Harris deflected questions of economic management. So, I guess I'm sort of characterizing them as the sort of moderate policies that we saw under the Obama administrations. I don't think we'll see huge differences between a Biden administration and an Obama administration in that regard. Some of the things that stick out are that Biden has suggested that scientists are going to lead the response. They're going to the pandemic. This is they're going to expand, test, and trace, and recruit 100,000 people to form a public health jobs corps. What else have we got on taxation? Higher taxation for corporations and for wealthy individuals. So that's mostly people that are, or households that are earning over 400,000 are going to see taxes increased there. I've seen some estimates that suggest that the top 1% of earners in the US are likely to see a 16% reduction in post-tax income. So that's a fair whack reduced there. But the taxation burden falls broadly neutral elsewhere. And there are a few big spending pledges as well. But basically, I can't see any massive tax hikes here, or at least these are policies, but they've got to get through Congress. And with a balance of power in the Senate, the way that it is, I think we may not even see some of these policies going to fruition. So, I mean, the policies that we have heard about have been reasonably well received, I think. But this is all about moderation from here on. We will see higher taxes, we probably will see higher spending, and we probably will see more regulation under a Biden administration than we did under a Trump administration. But moderation is going to be the key. A quick look at some of the picks that we've already seen. Who are the team members? So we're slowly getting to see what the final administration might look like. A few that stick out: Antony Blinken. We're going to hear an awful lot from him, I suspect, over the next 12 months or so, particularly on trade, things like that. Janet Yellen, she's going to be Secretary for the Treasury. I mean, that's all good news. She's former chair of the Federal Reserve. Pretty good pick there, I think. And who else? Anthony Fauci. We've all become familiar with him. He's staying in place as director of the National Institute of Allergy and Infectious Diseases. So he'll still be the lead policymaker as far as the pandemic is concerned. This is probably the biggest one as far as the markets are concerned, trade relations. What will trade relations be like under a Biden administration, and how will they contrast with a Trump administration? So I'm not sure that trade relations are going to be much different under a Biden administration. I think the biggest change is going to be in the mood. So if we take the US-China relationship, I think the US remains hawkish as far as China is concerned. But I suspect that the relationship will be less volatile, or at least the negotiations will be less volatile. The news flow will be less volatile. We won't be waking up to sort of midnight tweets from Biden, which change direction of negotiations. That's probably for sure. I think Biden's administration will likely focus on the human rights sanctions as the major means of leverage and coalition building, rather than sort of tit for tat tariffs. I know Janet Yellen has been pretty critical of the tariff systems that Trump has put in place. The obvious flashpoint to me is going to be Taiwan. I think the US will seek closer economic, possibly closer military ties with Taiwan. And that's always going to be a sensitive flashpoint with the Chinese. As far as we're concerned, I know there's been noise. Biden hasn't been particularly welcoming of Brexit. But I mean, set that aside, it makes good sense, whichever way you look at it, for the UK and the US to agree some kind of free trade agreement. We've got similar market mechanisms, we've got similar attitude towards markets, we've got a similar legal system, similar culture, close security relationship. You know, it's all there, and I think there's broad support, certainly bipartisan support, for some kind of deal with the UK. All in good time, obviously. What about the WTO? Will we see a renewed role for the WTO? Yeah, I think so. We've got Biden likely to move away from Trump's tendency toward economic isolation. So the WTO will become a more important tool, I suspect. And then there's things like the Trans-Pacific Partnership. I've heard speculation that the US might rejoin negotiations as far as the Trans-Pacific Partnership is concerned. If you might recall that pretty early on under a Trump presidency, he pulled out of the Trans-Pacific negotiations. I don't know. I don't expect the US to be a part of that, but I do expect them to push for some similar network of commercial cooperation, something similar to that. The UK, by the way, that we may well join the Trans-Pacific Partnership in the near future. But basically, so what are we seeing here? We're seeing similarly hawkish a relationship with China, but as a part of that, and as a way of leveraging influence there, I think we'll see a more collegiate, a more cooperative US administration moving forward. The pandemic, we can't get away from this. The pandemic is going to be the single most important issue in Joe Biden's mind, certainly as it stands. The pandemic dominates the economic outlook. The course of 2021 will be governed, how well the American economy does, and how well, by extension, the US stock market does, will be determined almost exclusively by how soon and how quickly the US emerges from the COVID pandemic. There are lots of other issues, but those issues are pretty small issues compared to the pandemic. And in that regard, we're going to see continued support for the US economy under a Biden administration. It'll follow two paths, one of which will be monetary. So the Federal Reserve has already done an awful lot, and it will carry on doing that. So interest rates, for example, they're going to remain really low until the recovery is well underway. The Federal Reserve will intervene even more if they deem it necessary, but their main function will be to make sure that capital markets are working well, so that there's no impediment to a vigorous recovery as and when the time is right. And in the meantime, we'll see more fiscal support. The current support packages, or some parts of the current support package, expire by the end of this year. So, I mean, in a couple of weeks. And I suspect we'll see renewed urgency amongst policymakers to try and get some of the support package, or at least part of some of the support package, in place before the end of the year. It looks to me like policymakers are coalescing around a sort of bipartisan proposal valued at something like 900 billion. But I'm reasonably hopeful that that'll come pretty quickly. In part, or possibly not in whole before the end of the year, but in part before the end of the year, and then certainly pretty quickly on into the new year. And we can't really talk about the US without talking about stock markets and valuations, I guess. There's an awful lot of speculation again out there that the US stock market is pretty richly valued. I mean, choose your valuation metric, but I mean, the one I'm choosing at this moment in time is the price earnings ratio, the current price earnings ratio. So US stock prices are traded in the aggregate at sort of 31 times earnings. That's pretty high. It's high when you compare it to its peers. So the Eurozone stocks are trading at something like 26 times earnings, and so too at Japanese stocks. So compared to those two, you can see that the US market is pretty richly valued. The UK stock market is trading at 17. There's plenty of risks for the UK, and they're all reasonably well priced in. So, look, in my view, US equities are much less attractive than UK equities at this moment in time. But I'm not overly concerned about that. Valuations are important, but I'm not overly concerned about valuations at this stage. So we look at the business cycle, and I think we're in the recovery phase of the business cycle. And of the four phases, you have a recovery phase, an expansion, a slowdown, and a contraction. And you tend to, we're much more concerned about valuations in the latter part of that cycle than we are in the early part of that cycle. For instance, if you go into the recovery phase with high valuations, you will emerge from the recovery phase with even higher valuations. I mean, that's very likely to happen. So I'm not too concerned about US equity market valuations at this moment in time. Again, it's a relatively small part of the US market that's transferring itself into this high valuation. There are plenty of US stocks that are much more attractively priced. So yeah, they're a little bit richly valued in the aggregate, but I'm not overly concerned about that. Albeit there being more attractive stock markets to be invested in. Okay, where are we? Let's try and sum all of that up. So the current balance of power encourages moderate positions, and moderate positions are going to be pretty conducive to decent equity market returns. So they are market friendly. So we're not going to see anything particularly off the wall as far as economic policies are concerned. Biden's team picks, particularly his economic team, they're all market friendly. They're all known, most of them, at least the big fish, are known quantities for sure. Janet Yellen, for example. We'll likely see a reset for trade policy, a much less volatile, much more sort of coalition-based approach will emerge, which is generally market friendly, but we still think that the US is going to remain pretty hawkish as far as relations with China is concerned. The pandemic is the single biggest issue, no surprise there, and we ought to see more fiscal stimulus pretty soon, but in any case that's going to be allied with a very loose monetary policy, which ought to underpin a relatively aggressive, relatively vigorous recovery in the next couple of years. Present day market conditions, what do we think about them? Yeah, okay, as far as US equities are concerned, they're characterized by rich valuations, but we're not too fussed about high valuations at this moment in time. They're not so high as to concern me in the first instance. And secondly, this is the part of the business cycle where valuations matter less, certainly in my estimations. And I'll leave it there. Thank you.